What I'd like to do this evening is talk a little bit about real estate and how we approach real estate. And when I say we, it's important to recognize that not only us as managers and as shareholders of Nicola Wealth do we invest significant dollars alongside our clients on the same basis as our clients, but we follow the same kind of principles that John's talked about with his portfolio within the real estate sector. So what would I like to do this evening? I'd like to briefly talk about the SPIRE portfolios, how we go about investing in real estate, and I'd like to talk a little bit about what makes SPIRE different. And then I'm going to invite my partner Mark Hanna up, who's going to talk about drill down on a couple case studies, and then tell us a little bit outlook and what he sees as the opportunities. So when we talk about SPIRE as an investment, if you're looking at commercial real estate, and we're not talking about investing in buying houses or your person, we're talking about commercial investment. So if you're looking at commercial real estate investment, you have an opportunity to invest in the public markets, which are REITs, or you have an opportunity to invest in the private markets. And what we've noticed, and John pointed out very clearly, is there's a lot of volatility in the public markets. So you can buy a diversified portfolio of real estate by investing in REITs, but you're going to be subject to volatility. You can alternatively buy investment in the private sector, but often you struggle with illiquidity. We started off in real estate in 2000 doing single-purpose limited partnerships. You put your money in, you had to wait until the asset was sold before you got your money out. What we did starting in 2005 was we created the SPIRE, the first SPIRE. We now have 3 SPIREs. We created SPIRE to address that volatility question, so we're private, also to address that liquidity issue by offering an open-ended fund so people can add money and take money out of SPIREs, which we think is the best of both worlds. Let me give you a little bit of an overview. Since 2005, we have now built 3 portfolios. We have a total of 98 properties, about 10 million square feet, close to 2 billion assets under management. We have a dedicated real estate team of 14 people. Mark and I lead that team. We do our own acquisitions, asset management, and finance. Let me just give you a high-level overview of the 3 SPIREs that we have. SPIRE Real Estate Limited Partnership was our first limited partnership that we started in 2005. Canadian, income producing, wanted to create diversification. So we started buying income producing properties. In 2007, we made our first investment in the US, wanting to further diversify. So we created SPIRE US Limited Partnership. In 2010, we said, okay, some of our clients really want to invest US dollars and get US returns. So we opened SPIRE US, instead of being a wholly owned subsidiary, opened it up to investors so they could invest directly, US dollars, get US distributions. And then in 2014, after looking at the markets, looking at some of the joint venture partners that we had, and I'm going to talk a little bit about that a little bit later, but we found that there's an opportunity for us to focus in on buying the right opportunities, adding value, and then selling. So in a sense, an IRR-driven portfolio. So we created SPIRE Value Add in 2014, which is a value creation portfolio. Just briefly, what are some of the differences? If we look at leverage, and in a down market, you're always concerned about leverage. We want to make sure we don't have too much leverage, too much risk. So the lowest leverage is in our SPIRE Real Estate Limited Partnership, under 50%, moving up to 65, no more than 65%. We're actually under that. But we've got a large concentration of multifamily in the US portfolio, a conservative asset class, so we don't mind having a little bit higher debt for that. SPIRE Value Add, it's opportunistic fund, so we use a little bit of cash and use more leverage, but it's a short window opportunity. Historically, stable distributions, 6% currently. We set our distribution each year for SPIRE and SPIRE US based upon the December 31st NAV. So it was 6% in January. NAVs have gone up a little bit, so the distribution actually becomes less than 6% as we go through the year if NAV increases. Same 6% in the US, only in US dollars, and there's no distribution. Distributions happen when we sell assets in SPIRE Value Add. Canadian dollars, we have a little bit of US exposure, so if you don't want to invest with US dollars, you get a little bit of US exposure through SPIRE Canada, but it's predominantly Canadian assets. SPIRE US is all US assets, and SPIRE Value Add is Canadian dollars, but it has investments on both sides of the border. Target returns, Canada, 8 to 10% has been our target. SPIRE US, 10 to 12%, and Value Add, 12 to 15%. A longer investment horizon for SPIRE Canada and SPIRE US. Typically, asset managers want to try and churn their portfolio. For both SPIRE Canada and SPIRE US, we really want to look at assets and say, when is the right time to sell that asset? If it's generating good income, if it's got a good future, we're in no rush to sell that asset. We're constantly reviewing our assets and looking and saying, is this an asset that will look well and serve us well into the future, or is it time to sell that asset? So longer term investment horizon for SPIRE Canada, SPIRE US. SPIRE Value Add, much shorter opportunity. Time is your enemy. Can we buy? Can we add the value? Can we sell? And Mark will give you a good example of that when he comes up. Greatest diversification. John talked about the importance of diversification. There's diversification by location. There's also diversification by asset class. And we've got the widest diversification in SPIRE Canada or SPIRE Real Estate Limited Partnership. Still diversification by location and asset type for SPIRE US, but a heavier concentration in the multifamily sector, which has served us very well. And SPIRE Value Add, we've got good diversification, both commercial developments and multifamily residential developments. Let's drill down a little bit more into SPIRE Real Estate Limited Partnership, which is essentially our Canadian portfolio. This is taken off of our website, shows us the number of assets and where those assets are located. We have 28 properties, about $700 million of gross asset value in Canada, and it's broken up, as you can see in the greens. We started in the west. We've got a greater concentration in the west, but our focus right now is growing that portfolio in the Ontario market, and Mark is working aggressively, and we've got some good strategies, and we see that portfolio growing quite substantially over the coming years, which will reduce our relative percentages in the other provinces. Looking in the Ontario market, picture of an asset called Joshua Creek, which is an office building, flex office in Oakville on the QEW. One of our asset types. Another asset type is traditional industrial. This is our Aero Industrial Park out by Pearson Airport. If we go into Alberta, this is Calgary Health Centre. Let me just pause and make a comment about Alberta. Everybody said, what's happening with Alberta? Alberta's in recession. That's one of the benefits of our diversification strategy is we have assets across the country. But within Alberta, we've only got about 30% of our portfolio that is actually related to oil and gas, and those particular tenants have long-term leases, none of them expiring before, I think, 2022, 2023. And we've got good diversification. This is Alberta Health. We've also got distribution. We've also got retail. So there's Alberta, they're not rolling up the carpets and going away. It's going to come back. But what we've seen with the Alberta market over an extended period of time is we get a higher income return in Alberta. And with 99% occupancy and that income premium, we're still comfortable with Alberta, and we will see Alberta come back. Looking at British Columbia, we've got some further asset class diversification. We've got a hotel in Victoria, which we really like. We're going to look at a reposition strategy that I think is going to bring out the value of that. We also own and operate our own self-storage portfolio. We have 4 properties in Greater Vancouver. We've got a great platform, a good track record and history in that sector, and we're looking to expand that aspect of our portfolio. We also entered this year into the seniors housing sector. We've got a great joint venture partner, and you're going to hear this more as I continue to speak. Partnerships are a great way for us to own, diversify, and also attract good quality partners that have a proven track record. So we have a partner and have 4 seniors residences They're in the business, they've put up 50% of the capital, have a good track record of management. So we like the seniors housing sector. Moving to the US, again from our website, there's the assets that we own in the US. $900 million. SPIRE US has grown more quickly over the last number of years. We've actually seen more opportunities that we get excited about in the US market. We like the multifamily sector. It makes a lot of sense for us in the US, and we've got about 60–65% of our US portfolio in the south and southeast in the multifamily sector. That's a whole nother talk about why we like the south and southeast sector, which I haven't got time for, but I'd be happy to address in the Q&A time. There's the concentration of our portfolio through the US. Texas, major markets, Dallas, Houston, San Antonio, and Houston. 4 major markets there. We like those. We've got office as well as multifamily in those markets. We also like the Washington State market, strong market. We've got industrial in that market. We've got retail in that market. And we've got a substantial portfolio of multifamily in the south-southeast, 50 properties. Venterra, John Ferresi is actually with us this evening, the CEO of Venterra. Been a great partnership. We've had a relationship with them now since 2007. We also have an office. This is an office building we own in Chicago with a partner called MDC. We're looking for strategic partners in markets that have their feet on the ground, local in that market. MDC's got a good presence in Denver and Chicago, where we own assets with them. SPIRE Value Add, the newcomer. We've got 16 properties, $37 million of equity invested. We've got the major portion of the investments are in British Columbia. It's in our backyard. Mark and I are very familiar with those markets. We've got a good partner in PC Urban, and Mark will talk a little bit about one of those partnership opportunities. But we were in warehouse, we're in office, we're in strata warehouse development. Good story, good returns. The top property we've already sold, so we've turned that property. It'll be closing next month and with a very good return for our investors. We also have a partnership with Grosvenor. Grosvenor's been in the real estate business for 300 years. They've got offices established in Vancouver, in San Francisco, in LA, in Washington, D.C. They partner with quality developers. They've been doing a mezz debt program for 10 years with a well-established, well-known Vancouver family called the Siegel family, Kingswood Capital. We have come in alongside them, so we provide 1/3 of the capital. Siegel family provides 1/3, and Grosvenor provides 1/3. So we're shoulder to shoulder with these partners who have got their feet on the ground in the local market with lots of expertise and depth.